Hello everyone, it's our finale with RMI LLP. I hope you're having a fantastic week. Today I just wanted to touch on a new topic, and that was real estate transactions and whether you claim them in a company or whether to claim them personally. So we're getting recent questions. Somebody's coming up to us saying, well, we're buying a multifamily unit. We want to build multifamily. Not sure if we should own this personally or whether we should own it through a corporation. And the simple answer is it depends, as always. So the main things that we look for is A, how are you going to finance the property? Many times if you have multifamily properties that you're purchasing, well, those ones are going to require you to actually own it through a corporation in order for you to end up qualifying for the financing. The reason for this is when you have 5 or more units in a complex that you're purchasing, the banks typically look at this as commercial lending. When they're doing commercial lending, they don't want to lend that to you on a personal basis. They want to actually lend it to you on a commercial basis. And so therefore it needs to go through a corporation. Now, when you have a single individual property, this becomes a bit more challenging because the banks want to typically finance these to you as an individual. Sometimes they'll allow a corporation to own the property, but it needs to have history, good, strong financials, and then they'll give the money to a corporation for a residential property. But we typically see the other side where they want to actually have the property owned by an individual. So in this instance, the answer again, it depends where it makes the most sense to own it. But a lot of times what we do is you can own the property as an individual through a trust, what we call a bare trust. And that bare trust states that the corporation is actually the beneficiary of this property. Therefore, you can still pay for the down payment through your corporation or your corporate structure. You can also take in the income and expenses through the corporation and the corporate structure. And what this allows for is for you to actually be able to use corporate dollars to purchase investment property, which is a huge benefit because it prevents you from having to actually take this out personally and declaring a big dividend for yourself. Now, in instances where you do this and you actually do the bare trust, there are new trust filing requirements. And what that means is every year by the end of March, you do need to file a trust return for this trust that has been created. So there is one additional filing requirement that is there, but otherwise it still gives you a major benefit when you have corporate dollars to purchase investment property. As always, we're here to answer any questions, especially when it comes to structuring and real estate. It becomes very important you look at your situation at an individual level as you want to make sure your situation makes the most sense for the structure you have. So as always, any questions, feel free to reach out and we'll chat with you soon. Thank you.